Gold has just crossed a historic level, trading around $5,100 per ounce, and investors everywhere are asking the same question right now. Is gold preparing for another massive breakout toward $5,500? Or is the market about to slow down after such an incredible rally? The precious metals market has been one of the most exciting areas in global finance over the past few years. Gold, which once traded near $2,000 just a few years ago, has now more than doubled in value. This kind of movement is rare for a traditional safe haven asset, and it has drawn the attention of traders, long-term investors, central banks, and even everyday people who normally don't follow the commodities market. But what exactly is driving gold to these historic levels? To understand what's happening today, we first need to look at the bigger picture of the global economy. Over the last several years, the world has experienced a series of economic and political shocks. From inflation surges to geopolitical tensions and global economic uncertainty, these events have created an environment where investors are constantly searching for safety. And when markets become uncertain, one asset always comes back into the spotlight: gold. Gold has been considered a store of value for thousands of years. Unlike paper currencies that can be affected by government policies or economic instability, gold is a physical asset with limited supply. Because of that, investors often turn to gold during times of crisis to protect their wealth. One of the biggest drivers of the recent rally has been geopolitical tension. Over the past year, global markets have been closely watching conflicts and political instability in different parts of the world. Whenever tensions rise, financial markets tend to react quickly, and investors begin moving money into safe haven assets. This surge in safe haven demand has helped push gold higher. Another major factor supporting gold prices has been inflation. Even though inflation rates have cooled compared with the extreme levels seen earlier in the decade, the cost of living remains high in many economies. Rising prices reduce the purchasing power of paper currencies, and that encourages investors to move into assets that historically preserve value. Gold has always been viewed as one of the best hedges against inflation. But the gold market is influenced by more than just fear and uncertainty. It is also deeply connected to monetary policy and the strength of the US dollar. Gold is priced internationally in dollars, which means the value of the dollar can have a major impact on gold prices. When the dollar strengthens, gold can sometimes face pressure because it becomes more expensive for investors who hold other currencies. Recently, the US dollar has shown periods of strength, and that has created some volatility in the gold market. At the same time, rising U.S. Treasury yields have also influenced investor behavior. Unlike bonds, gold does not generate interest. So when bond yields rise, some investors choose interest-bearing assets instead of gold. This creates competition between gold and other financial instruments. However, despite these pressures, gold has managed to hold above the critical $5,000 level. This is extremely important because round numbers often act as psychological barriers in financial markets. For months, traders were watching the $5,000 level as a potential resistance point. Once gold successfully broke above it, that level turned into a support zone. Now, many analysts believe that as long as gold stays above $5,000, the long-term bullish trend remains intact. But the story of the precious metals market does not stop with gold. Silver has also been making headlines recently. Silver prices have climbed dramatically and have been trading around $80 per ounce. Like gold, silver is considered a precious metal and a store of value. But silver has a unique characteristic that makes it behave differently from gold. Silver is not only an investment asset, it is also an industrial metal. It plays a crucial role in electronics, renewable energy technologies, solar panels, and advanced manufacturing. Because of this, silver demand depends on both investor sentiment and industrial activity. When global manufacturing expands, demand for silver increases. At the same time, when investors become interested in precious metals, silver can experience strong price rallies. This dual role makes silver one of the most volatile metals in the market. In fact, many traders refer to silver as gold on steroids. When gold begins a strong rally, silver often follows with even bigger percentage gains. But the same is true in the opposite direction. When markets correct, silver can fall faster as well. Right now, the relationship between gold and silver is particularly interesting. If gold continues climbing toward $5,500, silver could also see significant upward momentum. Some analysts believe silver could eventually approach $90 or even $100 per ounce if the precious metals bull market continues. Another important force supporting gold prices is central bank demand. In recent years, central banks around the world have been buying large quantities of gold. Many countries are trying to diversify their reserves and reduce dependence on any single currency. Gold provides a neutral asset that is widely accepted across the world, and it allows central banks to strengthen their financial stability during uncertain times. This steady buying from central banks has created a strong foundation for the gold market and helped maintain the long-term upward trend. Now let's talk about what could happen next. The big question traders are asking right now is whether gold has enough momentum to break above the next major resistance level, around $5,500. In a bullish scenario, several factors could push gold higher. Continued geopolitical tensions could increase safe haven demand. Inflation could remain persistent, encouraging investors to hedge against currency depreciation. And if the U.S. Federal Reserve eventually signals interest rate cuts in the future, that could weaken the dollar and boost gold prices. If these conditions come together, gold could gain enough momentum to break through resistance levels and move toward $5,500. However, markets never move in a straight line, and there is also a bearish scenario to consider. If the U.S. dollar continues strengthening and Treasury yields remain high, gold could face additional pressure. In that case, the market might revisit the $5,000 support level. A break below that level could trigger a deeper correction toward $4,900 or even $4,800. But it is important to remember that corrections are normal in strong bull markets. Even during long-term uptrends, prices often pause or pull back before continuing higher. Another factor that could influence the market is upcoming economic data. Investors are closely watching inflation reports, employment numbers, and central bank statements. These events can quickly shift market expectations and cause sharp price movements. Market psychology also plays a huge role in precious metals trading. When investors believe that a major breakout is coming, momentum can build rapidly as traders rush to enter positions before the move happens. This is why levels like 5,100 and 5,500 are so important right now. They act as psychological milestones that influence investor behavior. Looking at the bigger picture, the global economy still faces many uncertainties. High debt levels, geopolitical risks, and changing monetary policies continue to shape financial markets. In such an environment, gold often becomes an attractive asset for investors seeking stability. The current bull market in precious metals has been building for several years, and many analysts believe the long-term trend could continue as long as economic uncertainty remains elevated. Silver could also benefit from this environment, especially as demand for renewable energy technologies and advanced electronics continues to grow. So what should investors watch in the coming months? First, keep an eye on the $5,000 support level for gold. As long as prices remain above this zone, the bullish trend remains strong. Second, watch the $5,500 resistance level. A breakout above that level could trigger another major rally in the precious metals market. And finally, pay attention to global economic developments, central bank policies, and geopolitical events, because these factors will likely determine the direction of the next big move. Right now, gold, sitting above $5,100, is already a historic moment. The battle between bullish momentum and macroeconomic pressure is unfolding in real time. Whether gold breaks toward $5,500 or takes a pause for consolidation, one thing is clear. The precious metals market is entering one of the most fascinating periods in its modern history. For traders, investors, and anyone interested in global markets, the next few months could reveal the next major chapter in the gold and silver story, and the world will be watching closely to see what happens next. Thanks for watching and listening. Stay safe. See you in the next video.